Good afternoon, everyone, and thank you very much for joining us today. I might just do a quick sound check. If people out there can hear me, if you could someone could type yes into the chat box. Beautiful. Thank you, Simon. Thank you, Maddie. Excellent. All right. Well, thank you very much for joining us today. My name is Patrick Nelson. I'm from Reach Markets, and I'm hosting the session today, which is an investor briefing for DXN. Matthew Madden, MD, is running the session. I'll be simply hosting it or emceeing the session, and today's an opportunity for you to hear directly from DXN, get an update on what they've been doing and what their plans are, and understand more about DXN and the exciting opportunity that they present to investors. It's an open forum, so a robust conversation. If you've got any questions, you can type them into your chat box. When you type a question into the chat box, it doesn't appear in front of everyone. It will come up on my screen, and I'll ask it to Matthew at the appropriate time. So as we're going through the presentation, if something occurs to you or Matthew's talking about something and you would like clarification on that, or it poses a question, just type it in at that point in time. I'll try and ask the questions as they come up, but we want to get through things pretty quickly. So if it's not tackled straight up, we'll get to it at the end in the Q&A session. So Matthew's presentation will probably run for about 20 to 25 minutes, and then we'll get into any Q&A at the end of that session at that point in time. So again, thank you for joining us. If this is the first time you've come to a session like this, welcome. And if you are unclear on, you don't have a chat box in front of you, there's a red arrow top right hand corner. You should be able to click on that. It will launch that chat box for you. All right. Now, we've been observing Matthew joined DXN not that long ago, only in September last year, and since then, me looking in from the outside, I've seen a whirlwind of activity occur. Most importantly, from my perspective, we've seen the pipeline of sales growing and the delivering of sales, which is obviously what you want to see. They've opened a data center, but there's now, for me, a clear articulation of a vision and a strategy that has been put forward, and there's been an investment into telling that story back to the investor community and to the shareholders as well. So this is another example of how seriously they take that responsibility of working with shareholders and the investment community at this session today. But really, to run the session and to go through that is the person that's steering the ship, Matthew Madden. So Matthew, I'll just quickly read through our disclaimers and then I'll hand over to yourself. So any advice that's contained in this presentation is general only, doesn't take into consideration your personal circumstances, and you need to decide for yourself whether it's appropriate for you. Past returns are not an accurate indicator of future returns, and this is DXN's disclaimer on the screen here. Should you wish to have a read through any of that, that information would be available on the Investor Centre. This session is a recorded session, and we'll be publishing it once it gets through the necessary compliance in the coming days as well. Okay, Matthew, hand over to yourself.
Thanks, Patrick. I hope everyone can hear me okay. Just doing that sound check to make sure I've got a stable internet connection. All good?
All good.
Okay, well, thanks, Patrick, and thanks for hosting today. I think from our perspective, I seem to be going the wrong way. No? There we go. Okay, who is DXN and what are we about? So DXN has taken a view, we've taken a view that we really want to build out the edge story into the Australian market space. There's a lot of hype that's circulating around edge data centers and what they actually are and where they fit in the market. And the reality is that they're a much smaller facility than what you would normally find in the hyperscale type opportunities. Hyperscale, for people that want to understand what that is, hyperscale is really where you have large cloud wholesale providers that come into data centers and really dictate the terms in which they operate with the data center operator. The smaller edge data centers are located closer to where the customer is, and it really presents a great opportunity for DXN. The reason it presents that opportunity is we're a nimble operator. We have a prefabricated modular data center design. We take a small footprint. We build to an extremely high standard, which is under the Uptime Institute, Tier 3 and Tier 4 type reliability for data centres. We look to service key markets that are underserviced today, and those markets are in locations where there's generally a latency issue associated to people wanting to get faster responses from their applications, etc. The Sydney data centre that we have built is the most centrally located data centre to all DCs in the Sydney market. It is the closest data centre to the Parramatta CBD at Sydney Olympic Park. So if you looked at a point in the compass and put Sydney on it, our data centre is right in the middle of that. And that, from a strategic perspective, means that we are best served as a data exchange point for a lot of other data centres in the area. We have another part to our business, which is our modular data centre manufacturing business located in Perth, and that's a really important element to our strategy. It provides us with the ability to manage a full end-to-end life cycle of a data centre, and that life cycle starts with the concept for the data centre, the design, the building, the then shipping of that data centre to site, the commissioning of the data centre, the operation of the data centre, the maintenance, and then ultimately the expansion, and then we go through that whole value chain again. So DXN is uniquely positioned. We're a vertically integrated company, and that means that we have that ability to grow over time and invest in that intellectual property for the business. We've established a data centre. I'll get to Tasmania in a sec. We've established a data centre in Sydney Olympic Park, which the whole investor base is acutely aware of, and that data centre has the capacity to grow to 6 megawatts. It currently has an installed capacity in there of 400 kilowatts of available IT load, and it has a 1 megawatt underlying capacity into that data centre. So it means that we have the ability to expand that data centre as demand grows with it. Importantly, we've also moved from the sales phase of the business, and we've moved from the construction phase of the business, which is the most capital intensive part of that business, and we've received that accreditation of Tier 3 from the Uptime Institute, and we've now moved into that sales phase of that data centre. And we've already made a few sales into Sydney. So really, it's just more of a rounding of what DXN is and what our approach is to the market and how we intend to execute against that. Tasmania represented, and the primary reason for our capital raise presently, Tasmania represented a unique opportunity for us, and it was an opportunistic timing for us. It's a data centre in Hobart. There are 3 data centres in Hobart. 2 of them are full, and this one is the only one that has the expansion capacity available to take it up to 100 racks. We represented this data centre to the market as a good deal. It's a $2.7 million cash payment, and that is representative 6 times EBITDA. Now, importantly, the EBITDA that we're using to categorise that is inclusive of all costs, excluding depreciation and amortisation. It means that the cash contribution back to our company is $450,000 each year. So it was a really important accretive acquisition and one that gave us the opportunity to grow. The operator of that data centre, Tasmanet, will continue to be a channel partner for us in Tasmania, and we'll continue to help them service that account base and market. We're already seeing that that Hobart is a great opportunity, and if you look at our edge strategy, it goes to reinforce our edge strategy of data centres located in key regional locations that are supporting a population requirement. I'll just skip past this slide because we've already talked to that. my vision for the next 12 months has remained consistent, but I'll just reiterate it so that everyone's quite clear on what we're focused on. We want to complete sales over the next 12 months into the Sydney data centre to 148 racks, or an equivalent of 1 megawatt of power. The module sales of our business is our other primary focus, as that produces positive cash to the business, and it's important that we continue to track with that. And we're tracking to a $12 million target with that business, and we have secured $7 million to date. And that's a really important thing for DXN as we continue to secure business underneath that. We are actively involved in that market, and we're seeing that market as a high growth market for us. Market development for us is really about that edge DC design and build, the Southeast Asia and Pacific opportunities that are starting to come through, and we really wanted to get that first regional edge DC away, and Hobart represented that great opportunity for us to do that. The Melbourne data centre, there's a lot of focus in this particular area for us as a business. The development and capital expenditure was put on hold until we could resolve the power capacity. We have ascertained some early stage interest in that area, but it's too far away for us to really go into a development stage on that site. So the opportunity for us is to look at a short-term sublease, and that is actively being explored today, and we have agents that are currently looking at that for us. And this is primarily to avoid us expending money into areas that are not going to be producing an income for us. So Melbourne has just been put on hold and will be sublet so that we reduce the expenditure on that site. Again, the market growth in module sales is something that we have continually talked about, but for us, it is a market that is growing. The reason this market is growing is because in areas of Southeast Asia and the Pacific, there is a big shortage of skills available to build data centres, but there is a high demand for data centres. So hence the modular data centre construction method represents a great opportunity to introduce high quality data centres into markets that wouldn't ordinarily have that. It showcases the skill set in the Australian market, where we are regarded in this region particularly as a high quality producer of manufacturing goods. So when we deploy a prefabricated modular data centre into a developing market, it means that the operator of that data centre or the operator of that cable landing station can be assured of the quality that's gone into it, and it means that they get a product straight away. Now importantly, and one of the things that I have to highlight, is that we do not get involved in the civil parts of a data centre construction. We build the prefabricated modular parts to the data centre, and then we deploy them to site with the operator, who engages a separate civil partner. And the reason I'm highlighting that is because we do not take on the risk of a civil construction. We basically eliminate any risk associated to that by having key milestones with those customers. So this part of our business is a profitable part of our business, and it's one that we're heavily focused on as a growth sector for us. Again, the edge market and its growth. This slide has been around a little bit, so I'll continue forward. Talking to Sydney again, photographs that we have highlighted to the market for a period is what the build out is of the data centre. The data centre, as you can see, is constructed in an ISO form factor, or if you like, a 40-foot container. That doesn't necessarily mean it is what we'd say an empty container. It's a 29 rack, 200 kilowatt module, and it's representative of two of those containers together. At either end, we deploy power modules. So each part of the data center is constructed if you like, in a Lego form factor. We just bring the components in as we require it. So it means the expansion of the data center is relatively easy as we have the skills in-house and we do that ourselves. And it also means that we maintain, we don't disrupt customers when we expand capacity into the data center. It's an important point associated to modular data centers is that in some builds there can be disruption associated to any expansion phase. We do not have those disruptions. Essentially they're built off-site and shipped into place and connected up so the customers have that capacity. It's important to note that the total capacity for the data center is 725 racks and that would be 25 of those modules being deployed. And each time we deploy a model, we have available capacity in that module of 200 kilowatts. So the initial fit out of 1 megawatt means that we have power capacity to be able to support that initial stage for that development, and we already have modules ready to go and slip into place next to the ones that are already deployed there.
Matthew, a question from Frank. He asked, can you give a breakdown of the percentage of OS and local content in building the data center?
Okay, when we're talking about overseas components that go into the data center, I'm assuming that's what the reference is to the mechanical parts. Okay, so the percentage is about 60% is associated to our local manufacturing, and the other 40% is allocated to overseas. We have multi-source strategies for overseas if the question is relating to would there be any impact to coronavirus. We're looking to limit that impact to our business and the manufacturing, so we have multi-sources from Europe, Asia and the United States to make sure that we can meet any capacity demand that we have. Does that answer the question?
It does, thank you.
Okay. Okay. Speaking specifically to pipeline and why we put it up there, initially we wanted to demonstrate that the pipeline is a key indicator of demand. The Sydney data centre has now been officially launched into the market and has all the available capacity to be able to support customers now. When we brought this data centre online last year, there were some components that were initially missing that would require customers to come on board. They were the security components, and I did update the market on that. But I just wanted to reiterate that the data center is now fully operational, live, and accessing customers as they come in. There are several customers that are already on board into the data center today, and we're now approaching the market with a channel-first model. Now, particularly what that means is that rather than us starting to employ a huge number of salespeople to market the data center, we've decided to have a smaller number of salespeople focused around wholesale and reseller partners of the data center. It means that we can expand our sales resource to a greater number of people without having to expend the costs of running the salespeople in-house. So channels are a really important strategy. The second part to that is wholesale customers are important as well. Sorry, Patrick. Did you say something, Patrick?
No, nothing from me.
Okay.
Yep.
Sorry, must have been a bit of feedback. Okay, so we expect the channel model to deliver a greater impact on the data center and help us fill it up. If we look at other data center operators and how they operate in the initial stages of development, there's nothing too similar to that. So we're following a tried and tested path of marketing the data center. The data center, as I iterated before, is the most centrally located data center in Sydney, being in the Parramatta CBD, and it's central to all the other data centers. So it sets it up for being a perfect backup or recovery data center in some instances, and also a good data exchange hub point for fibre operators. And we have a number of telcos connected into that data centre now, and there are more approaching us to come into the data centre, so seeing the value there. Sydney Olympic Park also has a strong focus on creating an IT hub similar to Macquarie Park in Sydney Olympic Park. So we are going to see an increase in demand for that data centre. So again, strong focus there. The primary things for us in terms of success into the data centre now are really focused on the key early lead indicators, and that is getting customers site visits through the data centre on a regular basis. So we're averaging now 10 to 16 customer visits per week through the data centre, and some of those are repeat visits, which is a good sign with any real estate play that you want the customer coming back to have a look at it a second time. We also have a strong focus on online marketing, direct campaigns with customers, and telemarketing, which is proving fruitful, and we're working hard to make sure that data centre gets its first stage completed as quickly as possible.
Matthew, just a couple of questions. You've kind of spoken to some of this, but I thought I'd get them out because it's kind of relevant to where we're at the moment. So there's some questions around probability of pipeline and confidence about the conversion. Someone has asked for more details, including estimated time and percentage probability. Is there anything more that you can shine, any more of a light that you can shine on this?
Yeah, look, I guess it's hard for me to talk to exact specifics in a pipeline because getting into customer detail is sort of giving the game away for our competitors and indicating where we might be. What I can talk to is the pipeline is a measurement over time, and there are varying stages within that pipeline that we work through. So there's obviously the identification stage, which if you think of it as a funnel, it's the starting point, and then we progress that through to what we call closed won or closed lost. So we don't always win everything that we go after. We do lose some deals, but we replace them with other deals. And the important part, I suppose, with the pipeline is making sure that velocity of that pipeline is at a good speed, so that anything that we're not going to win, we get out quickly, and anything we are going to win, we focus our attention on it. I don't know if I can go into too much more detail.
That's good. So if anyone wants to clarify anything more on that, I can have a look at it. But thank you. I think that answers the question. Kristen has asked, you've reiterated the target of 1 megawatt in 1 MW in Sydney in the next 12 months. The 12 months is financial year, or is it 12 months from today?
It's that rolling 12 months that we're working within, Patrick. So yep. We've reiterated that we've got that as a primary focus. Just to be clear on what 1 megawatt means for our business, that means that data centre is in a cash neutral position. It means it's not costing us any money to run it. So that's why we have a primary focus on 1 megawatt. I mean, we are acutely aware of managing that and getting that done. So it represents about 140 odd racks in the data centre, and at or around that point, the data centre is break even.
Got it.
Moving on.
Moving on. Yep.
No, wrong way. Go that way. Okay. I sort of wanted to just sort of talk through just quickly on the market for data center, modular data centers. So at one end, if my arrow is visible, we have the micro DCs, which are small 1 to 4 to 5 rack opportunities for deployment. We've just deployed a few of these into Tokelau, which was a recent announcement that we made. these are a larger micro DC, but nonetheless they are a purpose-built micro DC that we are deploying for that island nation with Teletalk as the end customer. Mining, and this is your typical smaller type edge type deployments. Again, focusing in on that edge strategy. Micro DCs, typical for base stations, 5G base stations and other things. Mining is a broad term. We'll just call that enterprise type applications. So mining being one of the primary users of modular data centers. Now we announced a sale to I think it was to the end customer is a large mining customer, and that end customer has 8 of these that are going to be deployed for remote mining to manage racks, to manage the large trucks that go around the site. And that again is another example of an edge DC deployment. And so we worked in partnership with Radlink to get that one done, and that one's currently in the final stages of the last of them being completed. Cable landing stations is one that we have been heavily selling, and I guess the opportunity here is that this is quite a buoyant market at the moment, and solutions into the Pacific are quite necessary, and solutions that are of a high quality. So our cable landing stations, as we've announced to the market, Tokelau brings the number to 10 of those cable landing stations that we're in the process of deploying. We have deployed into the Cook Islands, and we have deployed into the island nation of Niue. Both of those projects were positive in terms of a net contribution to the company, and I know that there's some questions about margins, etc. But I think to just reiterate that I can't talk to margins because it gives away competitive intelligence. But we are pursuing this market because we're good at it, and we make a difference to those nations, and it is cash positive to our business. Telco and government opportunities, we have a number of those in our pipeline. So all of these modules market are the types of customers that we have in our pipeline. And edge deployments for these types of customers are those 20 kilowatt to 1 megawatt facilities, and not too dissimilar to the data center that we just bought or in the process of buying in Tasmania. So we see that as a great market to support and grow into, and we've got a number of opportunities that sit there. Now in the hyperscaler and hyperscaler edge type opportunities, this is referencing to a particular design type, and it means that it's an open floor, open hall capacity, and we have a number of these opportunities that are in our pipeline as well, and working with some very large operators in that market that for NDA and confidentiality reasons we're not allowed to go into, but they are very real, and we are very focused on those outcomes. Again, just talking to the pipeline that's come up and the reason we put it there. The pipeline enables us to become a bit more predictable in how we produce revenue and margin from this business. Having a large pipeline, because this is a long sales cycle that the modular business goes through, we need to have all stages of the pipeline covered. Now, initially we've been successful in the cable landing station space because those are very near-term opportunities that are there now. So the pipeline is representative of a period of time for us, and we continue to work through that and fill it. And our end goal is to get to a $25 million reported revenue line from a pipeline that starts to become predictable. Now, reiterating, I joined the business at the end of August, beginning of September, and my focus has been on making sure that we have legitimacy in our pipeline, quality in there, and we close it out and have that strong focus with the business. We will see consistent growth come through here, but as you can see, we have been delivering against that pipeline. We've got AGIG that have come through in January. We just secured the Teletalk contract for $710,000. We signed our first maintenance agreement with Synergy for a module that we sold them, and that just goes to show that our customers rely on us to assist them in maintenance, and these are good annuity streams for us. And then Southern Cross as well, we announced at the end of last year. All contracts that we're delivering against right now. And I'll just reiterate, we intend additional contracts that we intend to close out in Q3 is $2 million, and we just pulled in the Teletalk contract in the last couple of days, which takes that number down to 1.3 for us to close out. So again, focused on delivering on what we say we're going to do. I'll move on, Patrick, if there's nothing else.
Yeah, no, please.
Recent contracts, just gone through those about AGIG and Synergy. The Southern Cross cable that we signed last year, please feel free to go through that. I suppose the business outlook is really where I wanted to just reiterate what our focuses are. The co-location pipeline remains steady. We did lose some customers out of that due to some delays in completion of the data center, but we've replaced them with new opportunities and new channel partners. So it remains steady as we take that through, and it has a weighted value of about $3 million presently, which we're pursuing with great vigour to make sure that we close it out. We've added more channel partners, and we continue to do that until we get to a good balance of channel partners, and then we'll manage them on performance to make sure that we get the best people working for DXN to deliver on our expectations of getting the data center filled up. We have co-location revenue. Some of that relates to Tasmania, and some of that relates to Sydney. But again, that target of 300K is in line with our expectations. The modular data center business, we talked to a term called work in hand. Basically what that means, these are contracts that we have closed that we're actively delivering revenue against. Of the 7 million that we have there, we've already announced 2.5 million of that revenue that we've delivered, and we continue to add to that, and we've added another $700,000 with the Teletalk contract. Again, reiterating the additional contracts we expect to close out in Q3 to 2 million. We have already announced the 710, which means we've got 101.3 to go. The unweighted pipeline remains steady at 470 million, and again, we're delivering that over time, and there are stages there, but it's all leading for us to target the 12 million for FY20, which equates to a conversion rate from unweighted pipeline of 2.5% to 5% per annum. Now, we did want to make a comment on the coronavirus, COVID, and the risks associated to that. As I'm sure the investment community is getting a lot of that from the market or the people today. Just from our perspective, we have not been impacted by the disruptions to production in China and logistics caused by the spread of the coronavirus. We have a multi-source strategy associated to our delivery, which means that because of that, we don't get as affected as some other companies may be. So at this point in time, we are good to go and on track. That's the end, Patrick.
Beautiful, thank you, and thank you to everyone who's been asking questions as we've gone. I've held off on posing them all to Matthew as we've gone along because some of them would have been covered in some of the material as he's gone. So what I'll do is Matthew, we've got quite a few. I'm going to make my way through, and there's some quite detailed questions here. So let's get cracking. Okay, so Jenny's asked, what are the steps for the company to be profitable? What are your forecasts from return value to shareholders? Do you have a clear path for this?
Yep. So the steps for the company to be profitable, and I'll just sort of iterate why our focus is on things. We obviously want revenue from customers to be the primary source of our ability to be an ongoing entity. Our primary focus is to get Sydney to that 1 megawatt that I talked to earlier, and also to be delivering about 20 to 25 million out of our modules business. That really sets the path for us on a good trajectory. We have right-sized the business in terms of making sure that we've eliminated any unnecessary costs, and we are focused on our Melbourne data centre site and making sure that we get that sublet in the near future. They're our plans. So management is heavily focused on sales, number one, into co-location and into our modules business, and number two is a strict and strong management of our cost base.
Okay. Catherine has asked, what sets DXN apart from your competitors, and how is this message getting into the market?
Wow. Okay. So I think what sets us apart is we have a primary focus on the edge data center market. That is going into the spaces where there are either latency issues or population centers that require faster delivery for applications. Could be associated to gaming, it could be associated to Bitcoin type mining, it could be associated to mining or infrastructure type opportunities. We have a unique ability in that sense, is that we are the only vertically integrated data center company in Australia. That means that we not only design and build the data centers, but we also operate and maintain them. So the key differentiation point is that that's our focus and that's our area, and it's around an edge strategy.
Graham's asked, are the Sydney, Melbourne and Tasmania data centres your primary business, or is it the module centres? How are you looking to expand?
Yeah, okay, that's a good question. The co-location business is part of our story. So I would say at the early stages of a data centre, they are extremely capital intensive, and we have the ability to have another source of income, which is our manufacturing business. So we really have two focuses, and that is the modular data centre business that we build and construct not only for ourselves but for others, which means that we have an ability to roll out additional edge data centres, and we control that supply chain. Plus we have an opportunity for customers to take advantage of our skills in that market and build that out. So I would have to say that our focus is edge data centres, and we do that for ourselves and we do that for others.
All right. There is a question here. I'll sort of paraphrase it, but it was from Peter, who is saying the share price reflects poor market vote on DXN strategy. Comment, please. Peter, I have to sort of preface this to say that Matthew is not allowed to sort of make market commentary about his own share price, so he'll be limited in what he can say. I guess he's been in the seat since September, and if you look at what they're achieving, what the business has been able to do in that time, you might say that this, for some people, it would be looking like excellent value. But certainly with a rights issue in play at the moment, that can create extra liquidity in the market, and you know that often is a good opportunity to be able to take a decent position. But I don't think there's much more that you can do other than focus on what Matthew has been focusing on, which is getting this business up and running and up to speed. All right, so there was a couple of questions, Aaron. Sorry, he'd been typing quite a few detailed questions in as we were going, and I apologise if I haven't done you justice asking those, but there were sort of issues that were being spoken about as we go. So I'll maybe ask you to retype. So there's one down the bottom. Is there a target employee cost as percentage of sales that DXN is aiming for when sales stabilise?
Target percentage, sorry, just repeating that question.
A target employee cost as a percentage of sales that you're targeting.
Yeah, okay. Over time, there is. In terms of how we get to that point, it's really about making sure that we've got the right employee size for the business presently. We have limited that. I think if we looked at it over time, it would probably be in or around a size that is representative of other operators like ours. I think going into that in some level of detail would be new information for the market, and it would just make it very difficult for me to answer that during a capital raise right now. So what I will do is I will address that question more broadly once we have completed this, and I'll do that to the market as a whole.
Thanks, Matthew. Question from Simon regarding the capital raise. Why is there a large value of 3.5 mil going towards working capital for modules? Yeah, anyway, that's probably in the summary of that particular question.
Yeah, so it's not 3.5, so just sort of correcting that a little bit. So the data center purchase price is $2.7 million. We paid a deposit of $270,000 on that purchase. So the majority of the funds that we are raising are going towards that. There's a cost of capital that we incur when we raise money, and there's also the settlement out of that. So really, the primary focus of the working capital is associated to our modules pipeline. The modules pipeline that we are executing against is delivering positive returns, but as with any business, while you're selling at varying stages, there is a capital draw that happens during the development stage of the module that we're selling to the customer, and we're using that money to recycle through and make sure that we can continue that path view and execute against those contracts. So it's purely to assist us in executing against contracts that we have in play and are bringing in.
Thank you. So just going to paraphrase a couple of questions here regarding revenue target. So on the 25 mil reported revenue target, what's the level of confidence, and what's the ambition for 2020, 21 and later?
So I can't sort of go into things that I haven't released to the market during capital raise. On the 25 million, in terms of a predictable outcome, level of confidence that we have associated to that is high. So we are progressing against that. Our target is 12 million that we've said that we would be looking to deliver against in this financial year. So we're heavily focused on that part first. And I think the 25 million is reflective of future sales into modules. And given the pipeline and engagement that we have presently, we are very confident in terms of being able to execute against that.
All right, thank you. Now, Matthew, I'm just scanning through this quite lengthy list of questions, but there's a lot of double up. So thank you. All right, I will. If anyone wants me to ask a question that hasn't been asked or the content hasn't been already covered, and I'll just quickly scan through here. Here's one for you. It's a fair question and one that needs to be answered in this day and age. Francis has asked, is there any reason there are no female board members?
Is there any reason? Look, I don't know the answer to that question. I will put it to the board as to why we don't have female representation on the board. But I can certainly say in senior management within DXN, we do have strong female representation. And we have in fact our head of sales for the modules part of our business is a lady by the name of Shalini, and she is a strong contributor to the business and one that we're really focused on. In terms of board members, when we look to bring on new board members, we will certainly be focused on seeing if there is some ladies that we can bring onto the board.
Mark has asked, okay, how did we get into a position with the lease of Melbourne DC without having the power capacity?
So to answer Mark's question is that I'm not sure how we got into that position. I joined the company in September, so I have been busily cleaning up those issues surrounding historical decisions that were made in Melbourne. The power element on the Melbourne site directly relates to city power and the landlord, so there is a linkage between the two, and we're actively looking to resolve that with the landlord. And in the meantime, we will hold the site for the near term by subletting it, so that we reduce our cost base there. And really focus our efforts on our Sydney data centre and our modules business.
Beautiful. All right. All right. Hang on. Here we go. Ben's asked, are you comfortable with the current level of skills within the business at all levels? Is there any recruitment planned?
Look, to answer Ben's question, we're always looking for the right talent to come into the business. Right now we have a good complement of people able to deliver on outcomes. We certainly hold our salespeople's feet to the fire quite regularly in terms of them being able to deliver on commitments. But to that sense, they're skilled operators. They have been in the market previously in other organisations. They're highly skilled. Our engineering team is extremely skilled. Our field deployment teams are really skilled. And I've got to say, our factory where we produce the modules today, they knocked out a module recently for SES, which is a satellite operator. That module is to go into Papua New Guinea. That would normally be a 12-week cycle to get that built, but due to the customer wanting us to get it out quickly for them and helping us manage those costs, we knocked that module out in 5 weeks, which is just incredible. So I'd have to say I'm really happy with the team that I have and the skills that I have in the team. But as we grow into our revenue and growth of the business, we'll look to bring on talent in areas that we have gaps.
Beautiful. Ben's asked, with 10 to 16 customers coming in every week, what is the general feedback from them about the facilities at Sydney O1?
Yeah, so the feedback has been extremely positive. So the customers that we're bringing through are channels and reseller partners, and the unique opportunity that DXN represents to other data center operators is that we can provide a customer, like a channel partner or a wholesale customer, a data center inside a data center, and that's because it's completely containerized. So it has a heightened level of security. It has a privacy factor for those customers as well, and the feedback from them is extremely positive. So we see the Sydney data center as a time thing. It's a timing thing. It's just educating market, new style, new way of doing things. The market is extremely positive about it. When they get in and they have a look at the data center, they're absolutely blown away by the quality. And to that level, it's at a solid level. For investors that, and I'll just throw this out, Patrick, for investors that want to contact you or me and have a data center tour, we can arrange that so they can see actually what we do. And we would be more than overjoyed to do that, so they can have a good sense of what they have invested in. So those based in Sydney that want to have a look at the data center, please come through to us and we'll be
okay, all right. So if you're on the session and you'd be interested in that tour, just type tour into the chat box and we'll get in contact with you and coordinate that. You can go to the Investor Centre of the DXN website and ask questions directly from there. If you go to the About Us page, there is an area where you can ask questions to the team. And anything that you want, you can come directly back to Reach Markets as well, and we'll coordinate getting answers for you as well. So happy to have them there. There are quite a few questions coming through, and I'm just mindful of time. So let me just have a quick read. There is, sorry, and I do need to ask this question. Simon has asked, please advise how many racks have been sold at Sydney. Is that something you can advise on, Matthew?
No, I can't. I can tell you that we have about 4 customers in there presently. That's what I can tell you. I just can't go into the rack numbers at this point in time.
Okay. All right. When would we expect that sort of news will come out?
We'll progress that out post the capital raise and start to communicate to the market how that's performing.
Yep, okay. Beautiful. All right, now let me just have a quick link through. Okay. All right, so Dave's asked, David, I might get this question back to you directly from Matthew, so I get you a direct answer on this one, because this is specific, and I think he can go into a bit more detail with you one-on-one on that one. Other than that, for those that have typed in tour, there'll be an opportunity to get some FaceTime with Matthew. Matthew, will you hold that tour?
Yeah, I can, absolutely, and I'd be more than willing to do that. Obviously, on the tour, there's some things I can talk to you about. There's some things that I can't, but I would be as open as I possibly can about the data center, and those interested in the technology. We'd be happy to show you what that is and what you've invested in, because I think it's going to change a lot of the way that edge data centers are deployed in the market. And I think you know, we're an Australian company. We manufacture in Australia. It's a really good story, and you'll like what you see in terms of what we deliver.
Beautiful. Okay, guys, I want to thank everyone for coming along today. Matthew, thank you for your presentation. It was excellent. There were a lot of questions in there. If you feel like we haven't got to the question that you need an answer to, email it through to us. There's a survey feedback as you leave this session. Put those questions into the survey, and I will get them back to Matthew this afternoon. But other than that, Matthew, I'll leave the last word with yourself.
Yeah, so the last word I think is that this is the final equity funding we're looking at for the foreseeable future. We've got sufficient working capital to deliver on the near-term opportunities that we have in place. And there are a number of opportunities that the business is looking at for growth. We're only going to be looking at positive contribution, not just growth for growth's sake. So I really wanted to just reiterate that to our investor community, that DXN is about building a positive data center story into the market, growing the edge story, which I think we have a very key differentiator, and as a manufacturer and a fully end-to-end data center operator from concept through to operate, we're uniquely positioned, and I think we've got a good story that's going to continue to grow. And thank you for your patience as investors in our business.
Beautiful. Thanks, guys. Cheers.